Jerome Powell, the chairman of the Federal Reserve, is finally worried about the labor market, and his comments last week gave us the lowest mortgage rates we've seen the entire year. We also got the latest National Association of Realtors existing home sales report, and existing home sales actually beat expectations and are up 2% from the previous month. And even though existing housing inventory is up 15.7% from a year ago, existing home sales prices have still not dropped from a year ago, and we'll discuss in a minute. Also, you can literally buy a brand new home right now for $0 out of pocket with a 3.99% mortgage rate all around the Fort Worth metroplex if you're ready to go and you can close by the end of next month. And in the community I'm going to be showing you today, you can get homes for as little as $2,050 a month with literally zero cash. Housing inventory still looks like it might have peaked for the year, which means we will have peaked 2 to 3 months earlier than all the recent years. And both Dallas and Collin counties had a big jump in new contracts this week, which is not that surprising considering how low mortgage rates are. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip code in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 25th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, starting with market news. Last week, Jerome Powell gave a speech at the Economic Symposium in Jackson Hole, and I'm just going to read you some quotes. The July employment report released earlier this month showed that payroll job growth slowed to an average pace of only 35,000 per month over the last 3 months, down from 168,000 per month during 2024. And we talked about this a few weeks ago when this data came out. But there were some massive negative job revisions over the last few reports. I'm talking about these reports were revised down by more than 100,000 jobs per month, the 2 previous months, both of them. But back to the quote. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. In other words, it hasn't broken yet. Labor force growth has slowed considerably this year with a sharp fall off of immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a market slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. So the Fed is just telling you the labor market is way softer than they thought after those huge negative job revisions, so they should probably do something about it. And obviously the only thing they can do about it is cut rates, which then had the bond market saying, okay, more rate cuts are probably coming, which means the 10-year yield can now go lower, which then leads to mortgage rates going lower. And that's how we got the lowest mortgage rates of the year last week. So as of now, we should all be expecting some more rate cuts this year, but that can also change very quickly. If job creation grows just a little, I mean, we're currently averaging around 35,000. If we get up to like 70,000, which again is super low compared to the average of 168,000 per month last year. But if we get just a little bit of growth, then the Fed can very quickly change their outlook and say, actually, everything is fine. And this is because some of the members have said that job growth between 50,000 to 75,000 is now considered the replacement rate due to the slowing population growth. So they're saying right now 35,000 is definitely too low, but as little as 50,000 could be the new normal and mean everything's fine. And 50,000 is not very far away from 35,000. So just like it's been for years, everything is going to be decided by these upcoming labor reports. But this is the first time that Powell has finally acknowledged, okay, the labor market is actually too soft now. So that's good news. And if you want lower mortgage rates, then you better be hoping that job growth stays below 50,000 for the rest of the year. Okay, moving on, we also got the National Association of Realtors existing home sales report for July. And existing home sales for July exceeded monthly estimates and showed a 2% month-over-month growth, which was a 0.8% year-over-year growth in July. That's a total of 4.01 million sales happening in July. Unsold inventory actually dropped by 0.1%, which takes us from 4.7 months supply down to 4.6. And month supply just means based on the amount of homes that we have today and how quickly homes are selling, if no new homes were to come on the market, how long would it take us to sell out of homes? So we went down from 4.7 to 4.6. And you should know that historically, when someone is talking about a buyer's market, they're referring to a month's supply greater than 6 months. And we're currently only at 4.6. So if your only point of reference is the last 5 years, then you're gonna think we're in a buyer's market. When the reality is we're actually not even very close to a true buyer's market at all. We're at a 4.6 and we would need to be above 6. So if you hear anybody talking about a buyer's market, this is not a buyer's market. A buyer's market is much cooler than this. Then the median sales price of single family homes increased by just 0.3% up to $428,500. So essentially flat from a year ago. And then zooming into the South region, which we are a part of, we had both a 2.2% increase in sales month to month and 2.2% increase year over year. So while the average of the country was just a 0.8% increase for the year, the South region was up 2.2% for the year. 31% of sales in July were cash sales. That's up 2% from last month and up 4% from a year ago. Only 2% of sales were distressed, which means short sales or foreclosures. That's essentially at historic lows. And it's down from 3% last month, but it's up from 1% a year ago. But still, 2% is an incredibly low number of distressed sales, especially for all these people talking about housing crashes. And the crazy part is they've been saying it's a housing crash since distressed sales were at 1%. And I also want to note that nearly flat home price growth suggests that roughly half of the country is seeing price decreases and the other half is seeing price increases. So depending on where you're watching from, this data might not feel that representative of your experience. Because again, this is covering the whole nation. But one thing is for sure, home buyers, you are in the best position you've been in the last 5 years. This is the coolest market that you've seen. And from right now until mortgage rates drop sometime in the middle of next year is what I think, this is your best time to buy a house. It's the best chance you're gonna get at a big discount. And also remember that just back in July, which this report covers, mortgage rates were an average of 6.72%, whereas right now we're down to the 6.5s. Okay, now moving on to my property showcase for the week. If you want a home for literally $0, then now is the time to buy it. We're basically at the end of this promotion because you have to be able to close by next month. So you'd pretty much have to contract this week in order to close in time. But not only do you get the house for literally $0, and that includes not paying any closing costs, I'm saying literally $0 out of pocket, but you'll also get a 3.99% mortgage rate. These are by far the biggest incentives I've ever heard of in my entire life. This home you're looking at is in a new community in Denton, and they've got homes here for as little as $2,050 a month, again, with $0 out of your pocket. It's like free houses out here. But the home you see in this video is a 4-bed, 2-bath, 1,849 square feet for just $335,000, and after these incentives, your total payment, including taxes, insurance, and HOA, will only be about $2,550 a month. So if you can afford $2,550, then call me today and let's get you a free house. Also, this deal is available all over the entire Fort Worth Metroplex, all the way down to Midlothian, to Justin, to Denton, all over the place. So if you want a free house, call me right now. All right, moving on, let's start with national housing inventory. This week we had an increase of just 1,170 homes, more homes for sale in the country, which actually drops us another 1% this week, down to just 22% more inventory than we had last year. And you can see it still looks like we peaked in early August. And you can see all the previous years, here, here, and here, we're more like October, November before inventory peaks. It looks like it was early August this year. So that would be a big change from the previous 3 years. The reasons I think it's happening is a combination of frustrated home sellers are seeing homes having price drops. They're seeing more and more homes coming onto market in their neighborhood that they then have to compete with. And they're seeing they're not able to get the price they thought they were going to get. So a lot of home sellers right now are either pulling their home on the market or choosing simply not to list in the first place because they want to wait and see, are things going to improve? I'm not saying that's necessarily the best strategy. Maybe things don't improve, but that's the mentality right now. A lot of people are seeing inventory going up and they don't want to be just another house on the market. And I think that's why inventory is starting to decline earlier than usual. As well as with mortgage rates coming down, more people are going to be out buying houses coming up. So if less people are listing and more people are getting out to buy houses, then inventory is going to go down early. But overall, we have 861,238 homes available for sale in the country. This same week last year, inventory was only at 704,654. So still much better than last year. And then for reference, the all-time inventory bottom here in 2022, we had 240,000 homes for sale. The peak of last year, we had 739,000. Now let's move on to new listings. We've been pretty flat for the last 3 weeks. This week we had literally just 140 more new listings than we did last week. And you can see we've been trending below 2022 for the last month. So it's a little bit of a sign of hope that we didn't drop this week. I would expect that whatever is causing this drop here, we're actually probably going to see that reflected next week. But as of right now, we're finally back above all of the previous years. So it's a little sign of hope, but I wouldn't get too excited about it since it's just 1 week data. But we had a total of 66,819 new listings this week. Now looking at pending sales actually decreased by 666 homes, which is not my favorite number. And even though we dipped a little bit week to week, we actually have 8,553 more homes pending than we did a year ago, for a total of 376,916 homes under contract right now. And then moving on to weekly pending sales, which you can just think of as new contracts. This week, new contracts decreased by 462 nationally. And even though we dipped week to week, we still had 1,367 more homes contract compared to the same week last year. So we had a total of 66,711 new contracts this week. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we have been following almost exactly 2024's trajectory, which would suggest that around right now is going to be the peak. Maybe it'll get back up about flat right here, but it has been following very closely. I would say if this is not the top, we are very close to the top. And we actually had an entirely flat week this week. We're at 42%, which is exactly what we were last week. If this is not the top, we're very close to it. But for reference, last year we got as high as 39.9%, the year before 39.2%, and then in 2022, when mortgage rates first shot up over 8%, we had 43.2% of homes taking a price cut. And just so you know, if you want home prices to keep coming down, you would need this number to keep going up. And I think it's probably peaked for the year. Okay, moving on to mortgage rates. We started last week at a 6.59. After Powell's remarks, we got all the way down to a 6.52, and we started today at a 6.54. So this 5.2, that's the lowest number we've seen all year. We're still very close to it today. Then looking at mortgage purchase applications, this is our best leading indicator to what sales are going to look like 30 to 90 days from now. And you can see most of the year we're having a lot more purchase applications than we did the previous year. And you can see that reflected by having more pending sales right now. This week we had just a 0.1% week-to-week increase, so basically flat, but this puts us at 23% year over year regarding the number of people applying for mortgages, which gives us 26 straight weeks of positive year over year growth. And I know that sounds like a crazy high number, 26% more people applying, but you have to understand these are record lows, so the numbers are going to be really skewed. Just know that this suggests 30 to 90 days from now, we're definitely going to be having more sales than we did a year ago. That's all you need to see here. We're not going to have 23% more sales. We're just going to have some more sales. But I've been saying it for well over a year now. We're not going to see real demand come back into the market until rates get below 6% for a sustained period of time. And even though these are the lowest rates we've seen the entire year, we're still 0.5% away from that. Okay, now we're moving on to the local markets, starting with the MLS data of Dallas County. This week, Dallas County had 547 new listings, which is 32 less than last week. We had 325 closings. That's 22 more than last week, but remember, closings are from contracts 30 days ago-ish. Of the homes that closed, 54 were immediate sales, meaning they contracted within the first week. That's 5 more than the previous week. New contracts this week jumped up to 303, which is 15 more than last week. So after 2 weeks of dropping, we had a little rebound this week up to 303, likely is due to mortgage rates dropping. Then in total, we have 2,157 homes either under contract or pending. That's 29 less than last week. Now moving on to Collin County. New listings, we had 406, which is 73 less than the previous week. So 3 straight weeks of pretty decent drops in new listings. I mean, you can see not long ago, 621, 587, 624. So 406 is actually very low for new listings in a single week. Then they had 259 closings, which is an increase of 19. They had 43 immediate sales, which is 10 more than the previous week. They had 206 new contracts, which is an increase of 33. So that's a big jump when you look. We were at 173, 192. We're back up to 206. Again, probably because of mortgage rates. And in total, we have 1,971 homes either under contract or pending, and that is 14 more than last week. Now we're moving on to the Market Action Index. If you've never seen it, it just takes into account all of this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in. Dallas County right now is at a 35, slight seller's advantage, and actually 35.14, 0.16, 0.25. That is a very, very flat, just hovering right above 35. But yeah, week to week, we just went from 0.16 to 0.14, so pretty flat. So slight seller's advantage. The big news of the week is the median list price finally fell down by 15,000. It's 1 week data. I wouldn't get excited about it. I would expect it's going to rebound next week, but that and the median price of new listings as well. And price drops at this point of the year are totally normal. And like I said, I believe this is going to rebound some next week, so don't get too excited, but that's not unusual this time of year. Average days on market increased by 1, median remained at 63, and average is 96, by the way. Number of homes having price decreases have been pretty flat. 50.52 is the peak back on August 1st, and we're still below that at 49.72. So pretty much like the national chart, we kind of are just flattening out. Inventory is actually declining, just like nationally, from 60.70 down to 60.36. So that's it for Dallas County. What should be happening this time of the year is things should be cooling off. Prices should be coming down a little, days on market going up a little. The only unusual things which we covered the same as nationally is inventory should not usually be going down at this point of the year, and it is. But other than that, everything's looking normal. Now moving on to Collin County, they're at a 33 slight seller's advantage. They've been cooler than Dallas pretty much the whole time. Their market action index, though, not as flat. It looks to be going down a little bit faster, but they're at a 32.56. Their median list price moved a little bit down this week. Median price of new listings, though, also down a little bit. But again, that's totally normal for this time of the year. Average days on market increased by 2. Median days remained at 63. Price decreases still not at the peak. The peak was actually last week, 57.94. It came down to 57.58. So again, just like nationally, we may be seeing the top of the number of homes having price decreases already. Their inventory as well is decreasing from 74 down to 20. And their market action index, you can see slow, steady cooling. So nothing unusual here. This is what should be happening. And then very quickly, you can see here the pending sales for Dallas and Collin County. Collin County actually had a big jump in pending sales right here, but I just show this so that you can see how big of growth they're having every single year. So every year the line is just totally clearing the line before because it's one of the fastest growing counties in the country. But even Dallas County, seeing more pending sales, just like how nationally we're having more pending sales. And now we're moving on to the hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same market action index number. Remember, everything at 30 or below is a buyer's market. So the absolute hottest city right now, and it just popped up last week out of nowhere, is Lancaster, Texas at a 40.99. And it holds the number 1 spot again this week. Carrollton then heats up 2. Coppell remains at number 3. Grapevine heats up 1. Duncanville cools off 3. Grand Prairie remains. Richardson remains. DeSoto heats up 2. Garland cools off 1. And Irving cools off 1. Then we like to zoom into specific zip codes. The absolute hottest is Irving, 75061 at a 47.43. And then there's a big gap down to Lancaster, 75134 at a 41.55. So this zip code in Irving is quite a bit hotter than everything else. And then starting at number 3, Duncanville, 75137, then Grand Prairie, 75052, Carrollton, 75007, Lancaster, 75146, Dallas, 75234, Dallas, 75206, Coppell, 75019, and Carrollton, 75010. So if you have a home in one of these zip codes, you should be able to sell for top dollar. Now moving on to the coolest cities and zip codes. The absolute coolest this week is Whitewright, and it cools off 3 spots to get there, followed by Leonard, which heats up 1. Rockwall remains at 3. Salina cools off 1. Blue Ridge heats up 3. Royce City cools off 3. Sunnyvale remains. Anna cools off 2, Van Alstyne heats up 4, and Lavon heats up 2. And since all of these are below 30, they are all officially buyer's markets at the city level. Zooming into the zip codes, the absolute coolest is White-Wright 75491 at a 27.93, then Rockwall 75087, Leonard 75452, Dallas 75254, Salina 75009, Dallas 75204, Blue Ridge 75424, Royce City 75189, Sunnyvale 75182, and Dallas 75233. As always, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.